assets and having peace of mind. I think coming out of the pandemic, many of us are very aware or very understanding now that we need to protect our assets and having peace of mind more than ever. And so I want to turn it over to one of our great financial educators out in Winnipeg, Canada, and she's going to be able to tell us and walk us through this session with her panel as well. So I want to turn it over to Kat Labassiere, and she's going to be able to share this session with us. So take it away, Kat.
Good afternoon, everyone. How is everyone doing? Welcome to our third workshop for today, talking all about protecting your money. So congratulations for taking time to be with us today. My name is Catherine Lavassiere, coming to you all the way from Winnipeg, Manitoba. I have some great business partners and colleagues that are going to be sharing alongside with me. First off, I'll share a little bit, about myself. I've been with this organization now for over 14 years, alongside with my husband. We have two incredible teenage kids, and it's just been an building a strong financial future for our family. I do not come from this background. I'm actually a farm girl. I grew up on the farm, so I studied agriculture and agronomy and came out with a Bachelor of Science. But along the way, a world system builder, this journey I was introduced, and here I am with all of you guys today. So we're going to talk about all about the strategies in safeguarding your money and safeguarding your assets to be able to have the peace of mind that knowing that you and your family are going to be well taken care of. So, with that, I'm going to share with you some great my business partners. Kicking it off this morning or this afternoon, we have Mr. Ron Romero. Ron is coming to us all the way from Toronto, Ontario. He's been in this business, you guys, for over 20 years, alongside with his wonderful wife of Liz. And the great part is they're building a business all across Canada, all across the U.S. right now, and they're starting to build a family business because they have an amazing daughter that's also building this business alongside with them as well. So that's Mr. Ron Romero. Then we're going to also, Jesse Jason is going to be sharing with us. And Jesse comes from a background, she was a medical doctor, you guys. Isn't that incredible? A medical doctor. But she is here with us today. Why? Because she has been in this business with us today for over 16 years. Absolutely incredible, building an amazing business all across Canada and the US. And you know what? Another family business as well. Her son, Cyrus, just turned 18, also is building alongside and with her. And they're on their way to building an incredible business. And lastly is Mr. Brian Stakowski. Brian is also out of Winnipeg, Manitoba with us as well. Brian used to teach martial arts for over 10 years. He's got his black belt, absolutely incredible, a little scary. I'm not even coming close to you. But I'll tell you what, he's been with us now for over 10 years, also has been doing this business with his wife, Jennifer, three dogs. And you know what? I'll tell you what, we're all here for one big purpose. We are all here to have more control over our family's future. So great job for showing up here today. So kicking it off this morning, all about proper protection, Mr. Ron Romero, take it away. Thank you.
Thank you, Kath, and welcome each and every one of you this afternoon. Hopefully, you're enjoying some valuable information through these workshops. My topic today is how to be able to provide a strong financial foundation through proper protection. So, if you're ready, we're going to go right into it. And I wanted to be able to share this with you because a lot of people have a misconception about several things when it comes to insurance or investment. Which one should I be doing first, or should I be prioritizing either one? Let's get things straight in here. Insurance is for protection if something happens to you, and investment is to plan for the future. Insurance and investments are like two sides of the coin that when you're young and you're starting out in life and you don't have a lot of money, but beginning to start all of these big responsibilities, so sometimes you think about yourself, maybe $500 a year will be enough for me to buy a proper protection for $1 million. So what that allows you is to have that peace of mind to be able, anything happens to say 3 years down the road, the family would be able to have that $1 million to continue on, making us realize that when we insure, we're not really insuring ourselves. What we're insuring the future of our family to be able for them to move on. Same thing when you're talking about investments. If you have a goal of to have $1 million of nest egg in the future, and say in the future you reach that $1 million, investment, that means you actually self-insure yourself. So whether you put your money in insurance or investment, it can travel both ways. But it can travel, sorry, it can travel into several paths, but the whole destination is going to be the same. What is it? It's going to be financial independence. And that's one thing that is something that we would like to make sure that people understand what life insurance is all about. It's not a fun topic to discuss about it, but it's very critical as part of your financial strategy. You help ensure your family's ability to continue on. Without good understanding about the life insurance, you may be able not to have the proper protection that you need, or you may not have enough as well. Today, a lot of people have kinds of protection. They have protection to insure their house, their cars, their phones, their appliances. They even buy travel insurance for their vacation. But when it comes to life insurance, people remain skeptical. The most important insurance that protects their family and their children is not taken seriously. You know, a good number of people believe that they won't die anytime soon. So why would they need life insurance for that matter? While some sign up with their employers and a group plan, the company may not provide enough coverage. And if their employment terminates, they will not have insurance. When you understand about insurance, one thing that also comes in mind is because of most life insurances requires medical exams, blood tests, and or health records before a policy is issued. If you have health problems, life insurance companies may deny your application or they may change at a higher rate. This is pretty much similar on how you car insurance test drivers with bad driving records. So question is, are you still insurable? The fact here in Canada is about 90% of Canadians have at least one risk factor of heart disease or stroke. Therefore, if you need any insurance, buy it as soon as possible while you're still healthy and insurable. Came to a point recently with my increased responsibilities with me and Lynn, my wife, actually have to buy proper protection for us. And just came back to me that I was already rated. At my age right now, I didn't see that coming, and I knew for a fact that if I bought more earlier on, that would have saved my money. So the same thing, buying life insurance in early is smart, as premiums tend to go higher as you age. Don't wait too long though; it may be too late because why? Your health matters in here. So how much insurance do I need? Well, buying a car is easy, and to insure those things, if you have a $30,000 vehicle, therefore you would like to insure that for $30,000 or more. If you have a home that is valued at $1 million, obviously you would like to insure that for about $1 million or more. But when it comes to life insurance, how does it actually work? How do you know how much is enough for you? Most people can even able to apply same valuation of life insurance when it comes to their own protection. Well, thank goodness we have this powerful tool, simple enough that everybody can actually follow. And with this tool, it can provide you the necessary information that you need. It's called the DIME method. DIME stands for debt, income, mortgage, and education. With this example, I put up here one client who's got about $60,000 of combined credit card debts, loans, and other debts, and also has an income of 50,000. 10 would be the income replacement, meaning if ever the breadwinner pass away, the people that they love the most will be able to continue on 10 years with consistent income, even though the breadwinner is no longer around. And then the balance of the mortgage, obviously, of 450,000. He's got two kids who are going to university and will perhaps cost about $15,000 a year. So that's about 120,000 for those two kids. And if you combine all of them, it's going to cost about $1,130,000. So that's one way for you to have that as calculation for your insurance need. Next one up is I want to discuss with you are the tax advantages of life insurances in here. Having a life insurance help you secure yourself, being not only for your loved ones. Before I go to the tax advantage, I'd like to share with you one quick story about how important life insurance is. With our clients about 3 years ago, or I believe 5 years ago, they were newly immigrants that came to Canada. And the first thing that they did was to buy a protection plan for them. They have a responsibility of them, and they were actually insured for amount of $500,000 at that time. 3 months into the plan, the husband decided to go to work and had this construction job. Unfortunately, there was an accident and he lost his life in there. 3 months into the plan, and the insurance company had to investigate on what had happened. But in about, but I believe in the second month or third month, they actually paid out the benefit to the family, and they were able to pay off the responsibilities that they had that time. Just shows you on how important and can make a life difference for most people. And that's just one benefit. The other benefit for most people who doesn't know will be the tax advantages of life insurance. Under the Canada Revenue Agency, insurance policy receive many favorable tax advantages. Number one is a tax-free death benefit. Entire death benefit, including the cash value, is income tax-free to the beneficiary. Two, the deferred earnings don't pay taxes until surrendered or lapsed. So while the cash is in the plan, it allows you to be able to actually have that growth in there. Tax-free withdrawals, when the cash value is sufficient, premiums paid can be tax-free withdrawals. And then the tax-free loans, when you take money out of the policy through the loans in there. So a lot of these benefits are actually available for us. And the best thing that we do is through these workshops, we get to educate a lot of people on how to demystify the old thinking about life insurance. Lastly, on this slide right here, the importance of tax advantages in here is it's not only good if you understand them. If you have a term insurance, the tax advantages is good on the death benefit, but there's no use because there's no cash value. On the permanent plans, if you have little money that you actually put into it, there's no difference it can make. So in reality, many policy owners either don't understand the advantages, don't have the money, or don't want to contribute enough to capitalize on these advantages. So also in the past, traditional policies with low interest rates did not help accumulate high cash value. So these advantages were not beneficial. But today, with a lot of organizations, companies are actually making their plans better. It has a lot of benefits in there. I wish I had more time to actually share that with you. That's it for me. And the next person is going to be discussing about the living benefit. Is well experienced enough, and I'll pass it over to Miss Jessie Jason.